Welcome to the Deep Dive. We're the place where we take a big stack of information, all the latest articles, research, expert takes, and we really dig in.
Yeah, we try to pull out those key nuggets of knowledge.
Exactly. The goal is always to get you well informed and fast. Maybe with a few surprising facts, perhaps a little bit of humor. Keep things interesting.
Definitely.
And today, we're diving deep, really deep, into the, well, let's face it, sometimes completely head-spinning world of crypto markets.
And crucially, how government policy intersects with it, often in, shall we say, unpredictable ways.
That's putting it mildly. You've obviously heard about crypto volatility. I mean, Bitcoin and volatility are practically synonyms sometimes.
They go hand in hand for sure.
But what happens when a really major government figure, someone whose words carry, enormous weight, what happens when they speak and the market reacts instantly?
Like in real time, demonstrating pure cause and effect.
Exactly. That's the story we're unpacking today, and we've got some great sources lined up. News straight from Cointelegraph, direct quotes from interviews on Fox Business, CNBC.
Even a really important expose from a White House official.
Yeah, all these pieces kind of converge on this one. Pretty defining moment for Bitcoin recently.
It was quite the sequence of events.
So we're going to break down why Bitcoin, after hitting these incredible new highs, suddenly took such a sharp dive. What does that tell us?
What does it signal about the U.S. government's approach to digital assets? Because that approach seems to be constantly evolving.
Definitely seems that way. And also, what are the bigger economic forces, the ones kind of churning underneath, still pushing and pulling on Bitcoin, regardless of these daily headlines?
Right, the macro picture.
Get ready for some surprises, maybe a few aha moments. Hopefully by the end, you'll have a much clearer picture of what's really going on behind those news flashes. Okay.
Let's do it.
Let's unpack this. So our story kicks off not with some slow burn, but a really dramatic, almost cinematic turn in the market.
It really felt like that. Just hours before the drop, Bitcoin was, it was soaring.
Blasting off, right. Hitting new highs, riding this huge wave of optimism. It felt like everyone was watching.
You could feel the momentum, a real dizzying climb.
And then, poof, it felt like the blink of an eye. The whole narrative just flipped.
And it took that sharp, stomach-lurching tumble.
Leaving everyone kind of scrambling, asking, what just happened?
Precisely.
So let's put some numbers on it. To really grasp this drop, Bitcoin fell below $119,000.
Yeah, the reports pinned it at $118,730, right around the time this was all unfolding.
And that number, 119K, or really the 120K market fell from. That wasn't just random, was it?
Not at all. That $120,000 level is widely seen in the market as a key psychological support level.
Psychological support.
Right.
Okay, what does that mean in plain English?
Well, think of it like a shared belief among traders. It's a point on the chart where many expect buyers to step in to sort of hold the line.
And the perceived safety net.
Exactly. Traders often place buy orders around those levels, creating a kind of temporary floor.
But when that floor breaks...
When that shared belief falters, yeah, it often triggers more selling, like a cascade effect. People see it break, they sell, which pushes the price down further, triggering more sell.
Accelerating the drop, which is what we saw.
Precisely what we saw. And here's the really wild part, the irony of it all.
Go on.
This huge drop happened just hours after Bitcoin had smashed its all-time high.
On the same day.
On the very same day. Earlier that day, it hit $124,457.
A record.
Wow. So record high to significant slump in mere hours.
It perfectly encapsulates the volatility.
And that earlier surge, it was powerful. I read it even briefly overtook Google.
That's right. For a short period, Bitcoin's market capitalization actually surpassed Google's, which was around $2.4 trillion at the time.
Making it the 5th largest global asset.
Just for a moment. But yeah, think about that. A decentralized digital currency?
No central bank, no government control, which is a huge part of its appeal for many, that promise of freedom from traditional systems.
But that very decentralization makes it paradoxically super sensitive to comments from, well, central authorities.
Exactly. It highlights the incredible responsiveness, maybe even hyper-responsiveness of these markets. And just to note, this data, the highs, the lows, the timing, It's all coming from Cointelegraph's tracking.
Right, painting that vivid picture.
What's really fascinating here, I think, isn't just that one thing caused another, the statement caused the drop. It's the fragility it shows.
Fragility, how so?
Well, compared to traditional assets, like a big blue chip stock or a major currency.
Yeah.
If there's a shock, the price might adjust over hours, maybe even days. It's often more gradual.
Okay.
Crypto markets, they operate differently. They're 2047 global. You have algorithmic trading reacting in microseconds. Information spreads like wildfire on social media and digital networks.
So reactions are almost instant and amplified.
Exactly. It's not just sensitivity. It's like a hair trigger reaction. Even, nuanced statements from officials can become massive, immediate price movers.
The speed of that market cap shift, then the correction, it's just incredibly fast.
It's that lightning fast feedback loop you get with these decentralized, digitally traded assets.
Okay, so that brings us right to the trigger. This wasn't some rumor, right, or technical glitch.
No, this was direct, unambiguous, a specific statement.
So who said it? And more importantly, what exactly was said that sent these huge ripples through the crypto world? What did it mean for Bitcoin right then and maybe going forward?
Right. The core piece of information, the catalyst for that market reaction, was a direct confirmation from the U.S. Treasury Secretary Scott Bessent.
Okay, the Treasury Secretary, and what did he confirm?
He confirmed that the U.S. government will not be making new Bitcoin purchases.
Not buying new Bitcoin.
Fair.
Okay, and this was official, not a leak.
No, absolutely official. Came straight from an interview he gave with Fox Business. So authoritative.
Got it. Do we know his exact words?
We do. And it's worth quoting directly because the phrasing is important. He said, "We're not going to be buying that, but we are going to use confiscated assets and continue to build that up."
Okay. Not going to be buying that, meaning Bitcoin, but we are going to use confiscated assets. That seems like a really crucial distinction.
It's profoundly crucial. You absolutely have to parse that correctly.
So no new market purchases means the Treasury isn't going out and buying Bitcoin on exchanges like everyone else.
Correct. No fresh capital flowing from the U.S. government directly into the open market to acquire Bitcoin for its strategic reserve. That specific avenue of potential demand shut down.
The second part, use confiscated assets. That means the reserve isn't dead, right?
Not at all. He explicitly stated they will continue to build the reserve using that specific mechanism, confiscated assets, crypto seized in criminal cases, basically.
So the policy is no new buys, but it's definitely not no reserve growth.
Exactly. The method of acquisition is the key here. Relying on seizures, not active market participation. That nuance is vital. The market might have initially just heard the no new buys part and reacted.
Without fully processing the confiscated assets part, which implies continued accumulation just from a different source.
Precisely. And connecting this to the bigger picture, Bessent's statement is really significant because it brings clarity. Maybe not the clarity some hope for, but clarity nonetheless.
Right, because there was some ambiguity before, or hope.
There was definitely ambiguity and perhaps, an unspoken hope or expectation in some corners of the market that the U.S. government might actually become a big buyer, a stabilizing force even.
And this statement just slams that door shut, for now, anyway.
It defines a clear boundary for direct government engagement on the buying side, which leads to the next question, really.
Why was the market expecting new purchases? Where did that idea come from?
Exactly. What previous policy, what discussions fueled that hope? Because understanding that context is key to understanding why the reaction was so sharp, so immediate.
Was it just about money, or were there maybe political reasons for drawing this line now, after seemingly hinting otherwise?
That's a great question. Was it purely fiscal prudence or something deeper about the role of government in these new digital markets?
Yeah, that's a vital point, because this wasn't just Bessent speaking into a vacuum, was it? His comment ties back to the whole idea of a U.S. Bitcoin reserve.
Absolutely. It takes us right back to the origin story, the genesis of this concept in U.S. policy. How did we even get here? What's the framework behind it?
Because, like you said, the market's expectation of potential government buying didn't just materialize out of thin air.
No, it was seeded by earlier policy moves. Specifically, a presidential executive order.
Okay, which one?
President Donald Trump signed a pretty significant executive order back on March 6th. It was quite comprehensive, showing real strategic thought about digital assets.
And it established the Bitcoin reserve.
It formally established not just one, but two distinct entities. A strategic Bitcoin reserve, yes, but also a separate, broader digital asset stockpile.
Interesting. So wider than just Bitcoin.
Correct, a broader vision. And crucially, the order spelled out the initial funding mechanism.
Which was?
Both reserves were to be initially funded using cryptocurrency, forfeited in government criminal cases.
Ah, so back to those confiscated assets Bessent mentioned. Seizing crypto from criminals?
Exactly, not the government going shopping on Coinbase. It was about repurposing illicit assets for national strategic use, a very specific starting point.
Okay, but where did the buying expectation come from then? If the initial plan was seizures.
Right, here's the kicker. While confiscation was the initial method, that same executive order also explicitly opened the door for additional Bitcoin purchases by the Treasury.
Ah, there it is. It was actually mentioned in the order.
It was. It wasn't just a vague hint. It tapped into that whole debate. Should governments hold Bitcoin like digital gold? Could it boost national security, economic power?
So the order itself signaled a potential shift from just seizing assets to maybe actively accumulating them.
Precisely. And the market definitely picked up on that possibility. That specific clause is what Bessent's recent statement directly addressed and, well, shut down for the time being.
Okay. And were there rules around these potential purchases?
Yes, the order specified they had to be budget neutral,
Budget neutral, meaning?
meaning they couldn't just use general taxpayer money. The acquisitions had to be structured so they wouldn't impose incremental costs on United States taxpayers.
So they have to find other ways to fund it, not just dip into the Treasury's main pot.
Exactly.
Yeah.
Maybe using existing assets or finding other non-taxpayer revenue streams. It sets specific economic guardrails, which explains the kind of careful exploration that was happening.
And we even heard similar things from Bessent himself earlier, didn't we? Before this latest statement.
We did. Back in March, just a month or so before, he was advocating for what he called a strategic shift.
What kind of shift?
He told CNBC, and also signaled at a White House crypto summit, that the government should actually stop selling the Bitcoin it seizes.
Stop selling it. And do what with it instead?
And instead bring it onshore, use existing regulations, and add it to the National Reserve. His vision was pretty clear.
So compensate victims first, then keep the rest.
Exactly. Compensate victims of whatever crime the crypto came from, and any remaining coins go into the National Reserve. He even framed it as a way for the U.S. to lead in global crypto. A big ambition.
Wow. And were they actually looking into ways to fund potential purchases too, beyond seizures?
Oh, yeah. It wasn't just theoretical. In April, Bo Hines, who was on the Presidential Council of Advisors for Digital Assets at the time,
Okay.
he publicly mentioned the administration was actively exploring funding options for acquisitions.
Like what?
Things like potentially using tariff revenue, or, taxes on imports,
Yeah.
or even rethinking the Treasury's gold certificates.
So serious high-level discussions were happening about how to actually buy more Bitcoin within those budget-neutral rules.
Absolutely. Which shows just how seriously they were considering that path, the path that Bessent's no new buys statement now seems to block. It wasn't just a fringe idea.
It really shows the evolution, doesn't it? From seizing assets to exploring active buying to now settling back on just using the seized assets.
It's a fascinating progression. You see that inherent tension, wanting to leverage a potentially powerful new asset versus maybe the caution or complexity of directly participating in that market.
Yeah, the initial order with that open door clause really suggested the government could become a big buyer.
Even with the budget constraints, yes, it
Yeah.
signaled potential.
And now that door is shut, very publicly. So why? Why draw that line now, especially if they wanted to lead in global crypto?
That's the multi-billion-dollar question, isn't it?
Yeah.
Is it purely financial risk aversion, worries about volatility or market manipulation?
Or maybe regulatory hurdles. How do you neatly fit a decentralized asset into a centralized government system?
Or even philosophical, a reluctance to fully embrace something that challenges traditional finance.
It definitely signals a more cautious approach, sticking with the known mechanism seizures rather than diving into market purchases.
Prioritizing, perhaps, stability and established processes over potentially riskier innovation in asset buying.
Okay, so the no new buys definitely put a damper on things, caused that dip. But you mentioned parsing the statement carefully. Was there a positive side? Any silver lining in what Bessent said for, Bitcoin believers or long-term holders?
Absolutely, yes. And it's a big one, often lost in the noise of the negative reaction to no new buys.
Okay, what was it?
The core piece of good news, arguably monumental for the long-term view, is that Secretary Bessent confirmed the U.S. government does not plan to sell its existing Bitcoin holdings.
They're not selling what they already have.
Correct. He said it very clearly. His words were, "We're going to stop selling."
Stop selling. Wow, that is significant.
It's a huge commitment. And he didn't stop there. He estimated the value of that existing reserve.
How much?
Somewhere between $15 billion and $20 billion at current prices.
15 to $20 billion.
Billion? With a B? Yeah. That's not pocket change. That's a massive holding that the U.S. government is now explicitly committing to hold, not liquidate.
That changes the narrative completely. Instead of worrying about the government dumping coins on the market,
They become a stable, long-term holder, a HO dealer in crypto terms, but on a governmental scale. It's a statement of conviction.
and this aligns with what others have said too, right? This isn't totally new.
It aligns perfectly. We've heard similar tones from David Sachs, the White House AI, and crypto czar. He previously described the reserve idea using very strong terms.
What did he say?
He called it a digital Fort Knox for the cryptocurrency, evoking that image of security, permanence.
Digital Fort Knox. That's quite a statement.
And he was specific, too. Back on March 7th, he posted on X, emphasizing the U.S. wouldn't sell any Bitcoin it put in the reserve and that it will be kept as a store of value.
So Bessent's comment basically confirms that high-level strategy straight from the Treasury.
Exactly. It solidifies it as official policy regarding their existing stash.
This no-sell policy, it feels incredibly significant, maybe even more than the no new buys long-term.
I think arguably yes. The short-term market reacted to the lack of new buying pressure, but the commitment to hold billions of dollars worth of Bitcoin and explicitly calling it a store of value, that sends a powerful signal globally.
It kind of legitimizes Bitcoin, doesn't it? Puts it on par with things like gold reserves, at least conceptually.
It certainly positions it that way. Even if they're not actively buying more, the act of a major government holding it as a reserve, as a store of value, that's a huge implicit recognition of its financial properties, its potential resilience.
Just the act of holding that much, designated as a store of value, that has to influence how others see it, right? Investors, companies, other countries.
Absolutely. It's almost a form of de-risking.
Mm-hmm.
If the U.S. Treasury deems it worthy of holding billions as a reserve, it might make other large institutions feel more comfortable allocating to it.
Even if some might say just holding seized assets isn't really leading, it still sends a message.
It's a strong message of validation. It suggests a growing acknowledgement at the highest levels that Bitcoin might have a real role to play in the future financial system, even if they're still figuring out exactly what that role is and how to engage with it.
Yeah, the nuance is fascinating. Okay, so we've got the policy statement, the immediate market reaction, the context of the reserve's origin, and this significant no-sell commitment. But what about the bigger picture? The stuff happening outside these specific policy debates?
Right, because finance never happens in a vacuum. There are always those deeper economic currents swirling around.
What are the main ones influencing Bitcoin's appeal right now, regardless of whether the Treasury buys more or not?
Well, the elephant in the room, really, is the U.S. national debt.
Ah, yes, the ever-growing number.
It's not just growing, it's ballooning.
Okay.
And it's a major macroeconomic factor pushing investors to look differently at assets like Bitcoin.
How big are we talking now?
Get this, the U.S. national debt crossed $37 trillion for the first time on the Wednesday, right before that Bitcoin drop we discussed.
$37 trillion. It's hard to even comprehend that number.
It's astronomical.
Yeah.
And it represents massive ongoing fiscal pressure. Promises made, spending done, far exceeding revenues.
And how does that connect to Bitcoin specifically? Why does a huge national debt make Bitcoin look attractive?
It comes down to inflation and currency debasement concerns. When a government has enormous debt, one way to manage it, or to stimulate the economy, is often through measures that increase the money supply.
Printing more money, essentially, or quantitative easing.
Exactly. And basic economics tells us that if the supply of money increases significantly, while the amount of goods and services doesn't keep pace, the purchasing power of each dollar tends to go down. That's inflation.
Your money buys less stuff.
Right. And this is where Bitcoin's unique properties come into play. Unlike fiat currencies where governments can theoretically print endlessly.
Bitcoin has that fixed supply. Only 21 million ever.
Precisely. That hard cap, that digital scarcity, makes it very appealing to people looking for a store of value against persistent inflation.
A hedge against the dollar potentially losing value because of all this debt and potential money printing.
That's the core idea. As traditional currencies face these pressures, an asset with a demonstrably limited supply that's decentralized and outside government control looks like an attractive alternative for preserving wealth.
So this debt situation actually fuels expectations for Bitcoin to go up in the future.
It absolutely does. Many analysts expect the next major Bitcoin rally to be driven significantly by money supply growth expectations.
The idea being more dollars chasing scarce assets like Bitcoin pushes the price up.
That's the thesis. Thomas Massey's analysis points strongly in this direction, that these huge macroeconomic forces, like the debt, will be a much more powerful long-term driver for Bitcoin than any single government buying decision.
It's the underlying tide, not just the policy waves on the surface.
A very good analogy, yes.
So this creates a really interesting dynamic, doesn't it? The government says, we're not buying more Bitcoin right now.
Which causes a short-term dip in sentiment.
But at the same time, the underlying reason why people are interested in Bitcoin, massive government debt, potential inflation, that reason is not only still there, it's actually getting stronger.
Exactly. The fundamental economic pressures driving adoption remain firmly in place, arguably intensifying. It highlights this complex interplay.
Policy statements create ripples. Macroeconomics create tsunamis.
Well put. The government's decision on buying affects short-term sentiment. But the reality of $37 trillion in debt and the policies likely needed to manage it could provide a much stronger, longer-lasting tailwind for Bitcoin.
And add to that the fact that the government is holding its existing billions in Bitcoin.
Right. It sends this fascinating mixed signal. Caution on new acquisition, yes, but also a long-term validation of Bitcoin's store of value properties happening right alongside the very macroeconomic trends that make such a store of value attractive in the first place.
It's a really delicate but incredibly compelling balance. So let's try to wrap this up. What does this all mean for you, our listener, trying to make sense of this stuff? Digital assets, global economics. It's a lot.
It is. But today, we saw a really clear example, didn't we? How one official's words can shake a multi-billion-dollar market almost instantly.
That immediate cause and effect. But then, digging deeper,
we uncovered the policy backstory, how the idea of a U.S. Bitcoin reserve even came about.
And maybe most importantly, those huge underlying economic trends like the national debt that are always there, shaping the bigger picture.
Yeah, often more powerfully than the daily headlines suggest.
And the key takeaway on the policy front seems to be, okay, the U.S. Treasury isn't going on a Bitcoin buying spree right now.
Right. No new market purchases.
Right.
But it's a huge but.
They are holding tight to what they have, that $15 to $20 billion stash.
Holding it explicitly as a store of value. That's a massive long-term signal, an implicit nod to Bitcoin's legitimacy as a serious asset.
It really is this intricate dance, isn't it? Immediate market jitters based on specific words.
Carefully crafted policy statements, drawing lines in the sand.
And underneath it all, the relentless pressure of global economic realities. Debt. Inflation potential.
Forces that continue to make decentralized, scarce assets like Bitcoin look appealing to more and more people.
Which leaves us with a final thought, something for you to mull over.
Despite that market dip caused by the no new buys news, think about the combination. The U.S. government commits to not selling its massive $15–20 billion Bitcoin reserve.
While at the very same time, the national debt keeps climbing, potentially fueling the exact conditions that make Bitcoin attractive as an inflation hedge.
How might that combination ultimately shape Bitcoin's perception as a long-term strategic asset, not just for individuals, but on a global financial stage?
And what does this whole episode tell us about that ongoing tension, that balancing act between traditional government control and the whole point of decentralized assets?
Something to definitely think about.
Indeed. Until our next deep dive.